Welcome to the Nadex Application and Strategy webinar series presented by Daryl Martin from apexinvesting.com. Today we're going to talk about why Nadex Binaries. What a lot of people don't know is that not all binaries are created equal. And there's 10 factors that you need to consider when you're choosing where to trade binaries. The first factor to consider is the deposit location. Is your money outside the United States? Most brokers will have you wire money outside the U.S. And they may accept ACH or credit cards or third-party processors, but find out where the wires go to know where your money is actually held. Nadex has you wire your money to a USA bank account and hold your money in the U.S. Now, are they over-the-counter or are they regulated? That's the second factor that you need to consider. If they're over-the-counter, they're not an exchange, there's no intermediate party, and the other side knows if you're getting in or getting out. The other side knows if you're winning or losing, meaning the person on the other side of the trade. Most binary brokers work like this, and they may have terms and conditions, but they're based on regulations at best, not necessarily regulated. Whereas with a registered exchange, the exchange is between you and other traders and the market makers. The other side of the trade doesn't know if you're getting in or getting out. The other side of the trade doesn't know if you're winning or losing. And Nadex is actually registered with the CFTC, and Nadex is the only binary exchange in the world where you can trade binaries on future indices, commodities, and Forex. The third factor is, do they give you a free demo account? And by free, I mean, do they make you fund an account and then give you a demo, or do they give you a demo account before or after a live account? So, will they let you have a demo account in either scenario? So, many binary brokers will only let you have a demo account after you've actually put your money with them. With Nadex, you can get a demo account before you fund the account. The next factor you need to consider is, are they playing any kind of bonus games? Beware of the bonus games and the fine print. They could be good, but make sure you understand the conditions. Such as some will say, hey, if you deposit $10,000, we'll give you a 100% bonus. We'll give you an additional $10,000. Therefore, you'll have a balance of $20,000 to trade with. However, let's say you lose 10 grand and have not earned your bonus, they might subtract it from your original deposit balance from the amount. Well, so let's say you lose 10 grand, they gave you 10 grand, they're going to take the 10 grand out first and subtract the bonus, leaving you with nothing. So often to earn the bonus, you have to trade a multiple of your deposit. The larger the deposit and the larger the bonus, the larger the requirement. So let's say they had a requirement of 15 times the amount and you put 10 grand in. That means you'd have to have $150,000 in trades before the bonus was ever earned and they didn't subtract it from your withdrawal. Or they might even have a 40 times the amount, meaning on a $10,000 deposit, you'd have to have a $400,000 volume in trades before bonus is ever earned and not subtracted from your withdrawal. The next factor to consider is that they have locked or unlocked binaries. So with locked binaries, once you get in, you are locked in until expiration. You can't get out until expiration. So you're either going to win or you're going to lose the maximum amount. And most over-the-counter binary companies use this method. Or do they have unlocked binaries, where you can enter anytime after they start trading, and you can close the trade before expiration whenever you want to possibly take profits or limit losses. The unlocked binaries is the method that is used by Nadex. The sixth factor to consider is settlement. So how do they base their settlement? When the trade expires, how do they determine the price to determine whether or not you won or lost? Most over-the-counter binary brokers are going to use the last trade price. That sounds great, but it could be an erroneous trade where it spiked up at the last second. That was the last trade. Whereas with Nadex, they're going to use the average trade price. They're going to take the last 25 trades, they're going to subtract the 5 high and the 5 low trades, and they're going to average the remaining 15. On Forex, with the bid-ask spreads, how they can change them is they actually use the midpoint to keep it fair and balanced for you. Nadex uses the average trade price method. The seventh factor to look at is the underlying instrument. Is it based on, say, stock indices or future indices? Stock indices are not tradable. Therefore, they can gap more intraday, affecting settlement prices dramatically. Stock indices also settle earlier, like at 4:15, whereas on future indices, they settle at 4:15 p.m. Eastern Time, increasing your trading opportunity and time. Nadex uses future indices, not stock indices. The eighth factor to look at is, do they use fixed strikes or price ladders? With fixed strikes, you have at the money only. And basically, you can basically trade right where the market is right now. Will it be above or below that at a certain time? However, with Nadex, they have at the money, in the money, and out of the money binaries. So you're going to have a variety of trading opportunities to choose from, and this benefits you in a lot of ways that we'll talk about here in a second. With the fixed binaries, one of the limitations is there's only two directions, up or down, buy or sell, bull or bear. So the price will either finish higher or it'll finish lower. And most binary companies are directional only. However, Nadex binaries are multi-directional. So you can buy it on true, okay, by saying true, you're buying it, and you're saying that it'll finish greater than a price. And that can be a bullish trade. Or you can say false and sell it, and that can be a bearish trade if you think the market's going to go down. However, you could also be neutral, and you could sell one above the market and buy one below the market, expecting that the market would stay within a range. Or you could have a neutral downward bias, where you simply sold one above the market. Or you could have a neutral upward bias where you bought one below the market. In addition, you could straddle it where you thought there was going to be a large move, like after a news announcement came out, so you could buy one above the market and sell one below the market. And you can do tiered, where you can layer the binaries. So if one profits, set it up to where it covers the others. If two profit, you make even more. If three profit, you can make even more. The 10th factor to consider, and probably one of the most important factors to consider, is the risk-reward ratio. Is it at least 1-to-1 or greater? And if you think about it, probability should be proportionate to reward. So, for instance, if you have a 50-50 chance, so if the market is at 1,500, and you're saying, hey, I think it'll be above 1,500 at expiration, well, you have a 50-50 chance of being right. Therefore, your risk should be 50, and your reward should be 50. And you can take out some bid-ask spread, but it should be approximately 50-50. And, one of the things that I see that a lot of people make a mistake on is they look at the payout and they miss something. It's not simply return on investment, it's the return on risk. So a 70% payout is not as good as it sounds. This is saying that not only can you make a 70% return on your investment, like make $70 on a $100 investment, but it's also saying that the most you can make on a $100 risk is $70. So either you're going to lose 100 or at best make 70. So be careful when you look at 70% payout, that it's not just ROI, but it's also return on risk. Let's look at a few examples on this. So in this example right here, if 50% of your trades were profitable and 50% of your trades lost, and you had a payout of $50 on a profitable trade and a loss of $50 on a losing trade, then you'd be break even, because 50% lost, 50% won, your risk and reward were equal. If you just had one trade that was profitable, moving it up to 51% profitable trades out of your total trades, then that actually moved you into a profitable territory, not accounting for any kind of exchange fees, etc. with that. Now watch what happens if we decrease the payout just a little bit, and notice how even if 50% of your trades are profitable and 50% of them lose, if your payout on a profitable trade is only $45 and your loss on a losing trade is $55, then now, even though half your trades were profitable and half were not, you're actually net negative. However, the only way to get it to even break even is you would have to have 55% of your trades be profitable. And with a $45 payout on a profitable trade and a $55 loss on a losing trade, that would bring you to break even. And notice that's only a $5 difference, requiring a 5% greater increase in profitable trades just to break even. So a very small difference. Okay, so now let's compare other binary companies and see how they work. And I'm talking about non-Nadex, non-exchange-based binary companies, where what you do is you put up $100 in risk, and the most they pay out on a profitable trade is, say, $70, $75, maybe $80 on a trade. What does that do to your net results? Well, let's say 50% of your trades were profitable and 50% were not. And the most you made on a profitable trade was $70, and you lose $100 on a losing trade. Well, the net result would actually be you're down $1,500, even though half the trades were profitable and half the trades weren't. You lose money. You actually would have to have 59% of your trades be profitable at a $70 payout and $100 risk ratio just to get close to break even. So maybe they pay out $75. You'd still have to have 58% of your trades to be profitable. You have to pay out $75 on $100 risk just to be a little bit past break even. And so there's a massive impact here that you really want to notice, that you want to understand that that's not just return. Like, people see 75% return and they're like, wow, but they don't understand that 75% return on risk. And so it's very important that you want to put these numbers in your favor on the trades, because your ratio of profitable trades has to be much higher if your payout on profitable trades is lower than a 1-to-1 risk-reward ratio. And another example is, if the payout is $70 and you had 62% right, you actually start getting into a profitable zone. But with only a 56% right, notice how it's negative. Even though 56% of the trades were profitable trades, the amount that you were paid out on a profitable trade was so much less than the amount that was taken away on a losing trade. Now let's look at Nadex. Well, Nadex has the tiered strikes, and so there's a lot of ways you can take advantage of that. But let's say we're looking at one that's out of the money, and let's say you only have 5% out of 100 trades are profitable trades. And so your risk on that is, let's say it's $5 on a losing trade, but your payout on the profitable trade is $95. Well, if you were correct only 5% of the time with that kind of payout, literally wrong at 95% of the time, you'd be at break even. Not including exchange fees, but basically you'd be at break even on the net payout on the trades. And then looking over what happens if you were correct 15% of the time, 15% of your trades were profitable, 85% were not profitable on a $5 risk on a trade and a $95 payout on a profitable trade. Well, if you were wrong 85% of the time and right just 15% of the time, you could actually be net positive $1,000 on the trades. Well, what happens if we go over to 10% and let's say it's a $10 risk and a $90 payout on a profitable trade, and only 10% are right and 90% are losing trades? Well, if 10% are profitable trades and 90% are losing trades with that kind of payout, then literally you'd still be at break even. If you have just a 10% increase in how often your trades are profitable compared to how often they're losing trades, then you'd have $1,000 net profit, again, not including exchange fees. And then looking over at what happens if you were right just half the time, and you looked at just the at-the-money binaries, and let's say you got in on an average of a $50 risk, $50 reward. Well, if you're right half the time and there's a $50 risk and a $50 reward, then you're at break even on the trade. And if we look over at what happens if 60% of the trades were profitable and you got a $50 payout on those trades on a profitable trade and a $50 loss on a losing trade, then you'd be net profitable $1,000 on your total trades out of 100 trades. So you can see the payout has a massive impact on the ability for you to be potentially successful trading binary options, whereas if you have the odds slanted against you where you can only make $70 on a $100 risk, it really puts the odds against you. And with Nadex, with the tiered binaries, then you're able to put probabilities and profitabilities in your favor because the payouts are higher potentially on the trades depending upon what strikes that you select. So again, remember, not all binaries are created equal, and when you're choosing where to trade binary options, there's 10 things that you need to consider. Where are your funds held, inside or outside the U.S.? Is the regulatory body a U.S. regulatory body? Can you have a free demo account without giving them money? Do they play bonus games, and if they do, what are the terms and conditions and details, and how does it really work for you actually to get those bonuses? On the settlement side, is it settled based on the last price or an average of prices, so that way erroneous trades don't throw off the settlement on you? Is it based on stock indexes or future indexes, therefore giving you more stable prices? Is it locked or is it unlocked, meaning can you get in or out anytime you want to before expiration, or are you locked in all the way until expiration? Do they have a fixed price only, or do they give you price ladders giving you a lot of different trading opportunities? Are they directional, buy or sell only, or can they be multi-directional where you can do straddles and you can do neutral trades and neutral trades with a bias? And do they have the ability to have a 1-to-1 risk-reward ratio or greater, or is it always less than 1-to-1? Such as $90 max payout for $100 risk, or $80 max payout for $100 risk. So make sure you consider these 10 factors when you choose where you're trading binaries. And if you're trading binaries right now, go back to your broker and check these 10 things out and see how they add up. To open a live or a demo account, simply go to nadex.com today. You can get a demo account in less than 15 seconds. You can get a live account from beginning to finish in as little as 5 minutes. Also, visit us at apexinvesting.com to learn more about how to trade binaries on Nadex.